probably have some more folks joining us, but want to get started and be mindful of everyone's time. Hello and good afternoon. I'm Tony Bramley, Business Development Coordinator here at TMC, and you are on TMC Connect. Today we have Brian View with Finlocker. Hi, Brian. How are you?
Tony, I'm well. Thank you for having us.
We are very glad that you are here, and thank you for being willing to share all things Finlocker with us and the TMC network. Brian is the president and COO at Finlocker. You guys are one of the newest partners to TMC, and we just are really excited that you're here. Want to tell everyone on the call today that you have come in on mute, but we do want this to be engaging. So please drop your questions in the chat or the Q&A, and I will read those out to Brian as he goes through the presentation. There will be a follow-up email that comes out tomorrow. It'll contain a link to the YouTube video that we are creating while we're doing the session, and have Brian's contact information if you have any questions for him after the fact. So without further ado, Brian, I'm going to turn it over to you.
All right. Well, thanks, Tony. I'm excited to be here. Finlocker is very pleased to be a preferred partner now with the Mortgage Collaborative. For me personally, I've watched the Mortgage Collaborative kind of grow and evolve from day one, from a different chair, and am now super excited to be part of it as a preferred partner, and was able to experience the summer reunion, last month at the wonderful Terranea Resort, and just pleased with again being part of the group. So what we're going to do here this afternoon is share some slides to just give a little bit of a backdrop of who and what Finlocker is. And then we'll actually spend a bit of time in our product itself. While at the conference at Terranea, I had the opportunity to give the 8-minute speed presentation. And so a little bit of what we'll cover today will be repetitive if folks have already seen that, but we will dive a little bit deeper given that we have more time this session. So what are we and what do we do? I like to start by just talking about kind of our vision for the Finlocker product. And so, here we're telling a story that we provide a tool that lenders can provide to consumers that enables financial fitness, and we focus purposefully on that next generation American consumer. And we believe that consumers have and can and will continue to build wealth through home ownership, and we like to start that with their first home. So a lot of what you'll see in this presentation will be home ownership and mortgage focused, but our product's not a mortgage tech product per se. It's more of a consumer finance product. But for this use case in this vertical, we do focus on enabling successful journeys towards home ownership. So before I get into another slide or two, I do want to kind of set the table for our business model. This comes up a lot, and since we're in a one-way presentation, I know it's tough for people to ask questions specifically. If you do have questions throughout the presentation, use the chat feature and send those through chat, and Tony and the team at TMC will be monitoring those, and they'll pipe up and let me know when I have a question to answer, and I'll do my best to address that. But one question that comes up on every presentation that we do, ask the question, how do consumers get to Finlocker? And so we are a B2B2C platform. So today, the only way consumers can get access to this tool is through a partner, through a sponsor. Typically today it's through a lender. So an independent mortgage bank, credit union, community bank, or other lender who has partnered with Finlocker. We then build that partner's instance of Finlocker using our custom white label solution. So in the App Store, you will see Finlocker as an app, but there's less than 0.5% of our consumers across our entire platform are in that version of Finlocker. You'll see other apps that are published, and we publish those apps on behalf of our clients with different product names. You'll see the Go Bag out there. You'll see the Paramount Data Vault, which is PRMG's instance of Finlocker. And you'll see, a dozen other branded apps on the App Store. Behind those is the Finlocker technology. So we are a B2B2C custom white label solution. For today's presentation, I'm going to kind of focus on a specific use case in mortgage, and it's up the funnel. And then inside of up the funnel, it's really focused on first-time home buyers. And I think by taking that approach in this presentation and the demo, it'll bring to light a lot of the consumer-facing feature functionality that's going to help someone who's early in their journey towards home ownership. But the product has applicability to all consumers, regardless of where they are in their home ownership experience, either first-time home buyers or an existing homeowner that is thinking of getting ready for that next buy, whether it's a second home or a new home or investment home, and even past clients of lenders that you want to offer them unique tools to engage them beyond mortgage closing to kind of keep them in the ecosystem. But again, for today, we're going to focus on the first-time home buyer segment. All of us that are in the mortgage industry clearly understand how important purchase business is going forward, and specifically in that segment year over year, how much that first-time home buyer segment is contributing to that overall purchase business. And so a couple stats here, depending on whose reports you believe or read, there's somewhere around 4 million first-time home buyers annually over the next, 4 to 6 years. I think it was a Fannie Mae study that showed that fewer than 30% of first-time home buyers really know what it takes to buy a home. And then we all understand the challenges in the underserved segment with respect to obtaining home ownership, obtaining financing, and the tools in Finlocker, we believe, can contribute and help solve for all first-time home buyers. So these first-time home buyers, don't just wake up one day and magically say, I'm going to go buy a home, and then I got to get financing for that home. Some do, but most don't. Most buyers of all ages, regardless if it's first, second, third, fourth time buying a home, but especially first-time home buyers, have a lot of questions. How much can I afford? What expenses should I be planning for? How much down payment do I need? What's the price range I should be looking at? Where do I start? When do I start? Finlocker helps answer those types of questions for consumers in real time on top of their direct source data. So what's important here is the platform is enabling a consumer to really link all of their financial accounts, their credit, and other information in one place. And then there's tools that fire off of that data, which I'm going to talk about in a moment. But then on top of that data, we're offering them insights, suggestions, recommendations, and answering questions along the way that they have for as they go through that early journey of preparing to become a home buyer. So just another way to answer that same question on the prior slide, but this one gives you a little bit of a visual into our mobile app experience. So in July of this year, we released Finlocker Mobile 3.0. That's our most recent up-to-date version of our mobile app. And so kind of working left to right, the app helps consumers get organized across their entire financial life. The tools in the locker help them create and set financial goals, create and set financial budgets, and then monitor and manage those goals and budgets. We enable real estate search in the app itself. So again, for lenders that are working with Finlocker, they now have a tool that provides real estate search among the other feature functionality that they have. We have a deep library of education content focused around financial literacy and specifically the home ownership and home mortgage process. The consumer can use embedded calculators in the app to understand kind of their affordability, how much they can afford, what their payment would be, et cetera. And then finally, when a consumer reaches that point of readiness, when they're now ready to apply for a mortgage. Let's say they've been in the app for 6 months, kind of getting ready. From the app, using their direct source data, they can actually start the mortgage application with the sponsoring lender. And we'll talk about that. So for lenders, this is a great slide just to kind of visualize where consumers are going today for specific tools. So when consumers are looking for tools online for budgeting and goal setting, they're going to places like mint.com. We know real estate search, they're going to Zillow. When consumers are thinking about their credit and want to know how to improve their credit or better manage credit, they're going to tools like Credit Sesame, Credit Karma, NerdWallet. And then when they're wanting to understand payments, how much they can afford, what rates are doing, they go to places like LendingTree, Bankrate, et cetera. What's happening behind those logos on the left of the screen is most times if that consumer started with you or you were hoping to work with them and they go into one of these products, they're being matched, sold, whatever you want to call it on the back end, to a marketplace. Typically that marketplace has some of the biggest logos and brands that we're all familiar with buying those leads. What Finlocker gives you as a lender is the ability to offer your prospects, your customers, your consumers the same tools that they would go get from 1, 2, 3, maybe even 4 of those disparate apps on the left. We give you all those tools in one place under your logo as the lender. And now inside of your environment, when the consumer is using those various tools, it's a one-to-one relationship. So that consumer is not getting, presented into a marketplace where other lenders can come in and purchase them. This is your one-to-one experience with that consumer. And in that, to kind of take it a step further, there are, at least 4 top leading indicators of a consumer who's entering the home buying journey. One is property search. So consumers start searching for homes. That's a pretty good indicator that they're thinking about becoming a homeowner, buying a home. Consumers that start to understand their credit score and start to play with tools that would help them understand what they would need to do to improve their credit score. Those are activities that are happening that are an indicator that someone's getting prepared for that homeownership journey. Consumers that are hitting online calculators to understand product and pricing options and payments, that's another indicator. And then finally, consumers who are really wanting to understand their cash flow. Do they have enough saved dollars for down payment, for reserves, for costs after owning a home? That's another leading indicator activity. Those 4 activities that I just described, again, are all provided to consumers inside the lender's branded version of Finlocker. So now you, as the lender who's provided this tool to your customers up the funnel, you now have visibility when they're doing real estate search, when they're interacting with their credit score, they're playing with the simulator to see changes to their credit score, when they're hitting the embedded calculators or the mortgage readiness assessment, or when they're setting specific goals like saving for a new home. Those are all activities now that you have visibility to in your environment that allow you to engage that consumer in a more meaningful way earlier in their home buying journey. Real quick on this, from a lender's perspective, beyond what I just described as value in that last slide, we all know that the sales and marketing costs for lenders, it remains expensive. It's one of the probably single highest costs for lenders. Top of the funnel leads tend to be inefficient. You have to buy more of those to get any kind of conversion. Bottom of the funnel leads tend to be very expensive. So while they're higher qualified, maybe there's more intent, they definitely cost a lot more. And then we all have seen the different reports. I think there was one this spring from Black Knight that said on average servicers only retained 18% of their customers. So retention rates remain kind of at this low sub 20% level, but we know there are servicers like Rocket who in their public facing documents talk about a 75+% conversion rate. And so the locker becomes a place when you can get your customers up the funnel engaged, will help you be more efficient with your lead flow and create the ability to curate leads so that your cost per lead becomes less expensive. And then if post-closing, your customers remain active in your instance of the locker, it's another way to retain that customer beyond that mortgage closing. I'm just going to speed through. So a couple of use cases for lenders. We're talking about up the funnel. I've talked a lot about first-time home buyers so far. Another use case up the funnel that our clients are using Finlocker for is consumers that we'll call not quite ready. So, if 10 prospective borrowers come into an originator's office, their branch, and 8 of those are mortgage ready and they have the intent, they're ready to go. You should take them right down the fast path into your point of sale or your LOS, get them into underwriting, get them into closing as fast as you can. That's what lenders do best. For those 2 out of 10 that aren't quite ready for various reasons, credit, DTI, lack of assets, timing, what have you, the locker becomes a great place to kind of groom and nurture and keep them engaged with your brand while they're using the tools to address whatever it is was holding them back from being ready. So a couple shocking statements I heard from originators was when I asked the question, where do you send customers today that aren't quite credit ready? You'd be shocked at how often I've heard, well, we tell them to go to Credit Karma, work on their credit, and then come back. Well, when they go to Credit Karma, they're not coming back. It's not happening. So you can give them the same type of tools that they would get from Credit Karma, but now you're giving them to the consumer in your environment. On the post-close side, the locker lives on. There's benefit to the consumer beyond the mortgage closing that we'll talk about, which helps you stay meaningfully engaged with that customer beyond closing, so that when they're in the market for the next purchase of a home or refinance or a cash out or debt consolidation or a home equity, they're in your environment and you can help them achieve those additional products with a lot less friction because you already have kind of this engaged customer and all of their data. And then we also have some servicing use cases, which I'm not going to go into today. From the consumer perspective, I'll work around this wheel quickly, starting at 11 o'clock and kind of working counterclockwise. Consumers who are enrolled in your instance of the locker have access to their credit score, credit report, real-time monitoring and alerts. And in Q4, we're adding additional features around credit that will allow a consumer to simulate changes in their credit score using the actual data from their account, their credit report. So an example there would be, I have a Chase credit card with $5,000 balance. I could go into the simulator and say, what would my credit score do if I paid down this Chase card by $2,000 or paid it off? Or conversely, what would my score do if I go buy this, F-150 and get this auto loan from Ford Credit? Those are all engagement tools that keep the consumer coming back into the locker and engaging with it, but are also extremely valuable to that consumer. Beyond credit, we provide the consumer a place to link all of their financial accounts. And I want to kind of focus on this real quickly here. Most people think about financial accounts in the context of mortgage around asset accounts and day one certainty and asset verification. And that's in the zone of what we provide as a byproduct. But when we talk about financial accounts, we're talking about both sides of the ledger and deep on both sides of the ledger. So when a consumer is linking accounts in their locker, they're able to link checking, savings, investment, 401k, IRAs, life insurance accounts, et cetera. On the liability side, it's everything from personal loans to auto loans, student loans, credit cards, charge cards, obviously mortgage accounts, HELOCs. I even have my Verizon wireless bill and my home and auto insurance policy linked in my locker. Once the consumer's linked accounts in the locker, there's several tools and widgets that come to life for the consumer. Things like spending analysis, budgeting, and goal setting tools all are enabled off of the transactional data that comes from those enrolled financial accounts. I mentioned earlier, we have a library of financial literacy video and links to education content, mostly focused on the home buying and mortgage process. We can also enable content from our clients. So if a lender has specific financial literacy education content, be it video or print or digital, we can enable that in the locker on behalf of the lender as well. We've built a mortgage readiness assessment tool, which perpetually analyzes the data across a consumer's locker And we're measuring that data against 7 metrics that kind of are built off the Fannie Freddie FHA VA guidelines. And so consumers in the locker, especially those that are early funnel, kind of preparing for buying a home and getting a mortgage, have kind of a roadmap in front of them of what's holding them back from readiness. And then once they do achieve readiness, we enable the ability for that consumer to share the data that's been aggregated in the locker. Some of the data is consumer contributed. We get that from the profile when they set up the app. Most of it is direct sourced consumer permission data coming off the credit report, the linked financial accounts. In Q4 of this year, we will also have the ability for a consumer to link their payroll accounts directly. So same way they link their financial accounts and we bring in the transactional data today, later this year, a consumer will be able to link their payroll account. So they would select who their employer is, log in, they would pop up a screen where they'd log into their payroll account, their employer's payroll system. And then they would link that payroll data directly to their locker. So in effect, consumers will be walking around with their, as a verified borrower, if you want to think of it that way, where they'll have access to their digital employment, income, and asset data in real time, always updated, ready to be used for, in this case, a mortgage application. In addition to sharing data from the locker to start a mortgage application, the locker also prompts the user to store certain documents that are needed for that mortgage application: pay stubs, tax returns. If there's a blemish on the credit report, we'd prompt them to upload a letter of explanation for that credit. And those documents are there ready. Again, once that consumer starts the mortgage application, Finlocker compiles the data. We create a Fannie 3.2 MISMO 3.4 file format. We also include the Fannie Mae asset key for day one certainty for asset verification. And then we also enable the consumer to select and share those documents. And that's all piped directly from the locker, the consumer's locker, to the lender. A couple different ways it gets piped. With our larger enterprise clients, we'll do an integration with their point of sale or LOS, and that would go directly into those systems. But it's also able to run without an integration, where an email alert would be sent to the loan officer or processor. They would log into the admin portal of Finlocker and basically download the data set, the documents, and drag those into their point of sale. Also available to the consumer, as I mentioned earlier, is real estate search. And then once they do become a homeowner, we enable the user to track the value of their home, as well as recently sold homes near their subject property. Here's who we are. We're a team of folks that are passionate about helping people obtain home ownership. And I love this statement. We love using new tech to solve old problems better. And what older problem is there than somebody getting ready for buying a home and becoming mortgage ready? So I'm going to pivot now into our product demo. Let me refresh the screen here. Tony, before I go, I see a couple of questions in chat, but I'm not reading them. Should any that we need to address?
No, I think they're just comments, but I did have a question about
Nobody's heckling in there?
No.
It's disappointing.
You're right. If they have to type it, it certainly does calm things down. I had a question about talking to the borrower. I'm sure it comes up. How do you protect my data if I've got all this stored? Can you talk a little bit to that?
Sure. So not to bore everybody with kind of the details, but we basically engineered our product. So we're a Microsoft Azure tech stack product, and no data is stored on Finlocker servers or premises. Everything is stored in the cloud using the Azure cloud. We have our Finlocker has a SOC 2 Type 2, so we're SOC 2 Type 2 compliant. We are essentially, this platform is built on bank level security, as you can imagine. There is a lot of data here that is representing the consumer. So security is probably our biggest focus and concern beyond kind of user experience. And so as we go through kind of contracting with lenders, we go through the scrutiny of vendor review and approval, and we've got some large banks that have put us through that scrutiny. We've passed every one of those. We're audited by folks like Fannie Mae. Microsoft comes in and does audits. Like I said, we have our SOC 2 Type 2 annual audit as well. But the best way to describe it is we've got bank plus level security, multi-layers of encryption on data coming in and out. And probably most important is Finlocker proper. We do not store any data on our premises.
Great, thanks, Brian.
So what we're seeing on the screen now is our web app. So we have a web app and we have a mobile app. Our web app is what do you call it? Mobile responsive, but we also have native mobile apps. So when we onboard a client and go through implementation, some of the things we're going to do is work with the clients, typically their marketing department, on branding, style, colors, etc. And so as I navigate this web app real quick, upper left is where the lender's logo would be. The left nav bar and the background of this page, where it's white today, are configured based on the lender's kind of style guide and color schema. This information center in the lower left, this is we would link directly with the lender's RSS feed. So if a lender has a daily blog where they're posting kind of real-time information, this would be where they could present that through. This widget here is what we call our offers widget. Our clients can have up to 10 unique tiles that rotate through here. This does not require any coding or development. This is a self-serve feature. So from our admin portal, our client can create images in their own marketing system, save those, drag them into the admin portal of Finlocker, and publish them into this widget. And then the button, this one says Submit Mortgage App. This button is also configurable, the color, the words on the button, and then the destination where the button goes. So we have clients that use these tiles to market other products and services they may offer, to promote other areas of their company, maybe to promote partners, whether it's home insurance, home inspection, etc. But this is another place where the lenders have the ability to kind of configure and customize. Each loan officer of our client gets set up as a user. And so each user then has their own profile in the Finlocker admin portal: photo, name, number, NMLS number, email address. And then each of those users have a unique link assigned to them, at least one. You could have multiple. And those links can be used by those loan officers to invite their prospects, customers, into the company's version of the locker, but tagged to that individual loan officer. We've seen lenders or loan officers use that unique link in their signature line on their email, on their landing page on the website, in their social media posts, in their generic digital marketing, behind a QR code. So there's no limit on how to use those links to drive through your normal marketing channels consumers into this product for sign up. The version that we're looking at here, this web app, is what we're calling Finlocker 2.0. Our mobile app 3.0, which went live in July, has a very distinct and different, more modernized look and feel, or UI UX, as well as a layer of engagement and gamification. And so I would invite anybody that wishes to kind of test drive the mobile app to just send us a note following this presentation, and we can send you a link where you can download your own Finlocker app and kind of get a feel for the mobile app experience as well. It's just easier to demo out of this environment. I want to talk about another relationship real quick that Finlocker has with another TMC partner, and that's Total Expert. So we are partnered with Total Expert as a client. So Finlocker is actually a client of Total Expert. We're using the journey builder layer of their technology inside our platform. And the Total Expert kind of journey technology is our layer of engagement. So as you look at this dashboard and you look at these data points, and I start to kind of go in and out of widgets, and you'll see different activities that are happening, all of those things are tracked and become data points in the locker, in Finlocker. And using Total Expert's Journey Builder technology, we're creating these parallel journeys for users in the locker that are driving and moving, if you will, off of those events, alerts, milestones that are happening inside these various widgets. So think of the Finlocker product powered by Total Expert as another extension of a lender's ability to engage a consumer beyond just the traditional lender consumer via CRM or email campaigns. We're giving you another ability through the locker experience to engage that consumer using things that they're doing that are important to them inside the locker, especially those that have entered the locker with a purpose of getting themselves mortgage ready. All of the journeys that are happening in the locker are happening on behalf of the lender. So just like the locker itself is white labeled, all of those communications coming out of the locker are also white labeled. So it's not Finlocker talking to your customer. This is just another deeper extension of your engagement with that consumer.
Brian,
Yep.
so I know that you said that this is completely customizable. So of the widgets, are they all available, and then the lender would just pick and choose which widgets they want within their locker setup? Or
Great question. It's almost like you and I kind of set this up and we did. You'll always get kind of a fully transparent view from me, just because it's easier to live that way. So we're not completely customizable. I want to make sure that is because that could mean a lot of things to a lot of different people. We have a templated format for customization that includes the placement of the logo, where the colors can be changed inside of these widgets, where you see some of these different font colors. That's a setup implementation. We do that as part of our implementation. Your question around widgets. So in this view, you are seeing all of the available widgets and feature function. And there are some today that can be turned off. So this information center, as an example, it could either be directly linked to a lender's blog site or RSS feed, or it could be turned off altogether. Property search can be turned off. This mortgage help in the lower right, which I'm not even going to show you guys today, we stood that up in about a 5-week period when COVID first became a thing, and then forbearance was starting to become a thing. We stood that up for a servicer client of ours to help them address questions around forbearance. And so this is typically configured off, but it could be, depending on the use case, it could be turned on. So that's configurable. And the rest today, so the credit, the budgets, accounts, net worth, spending, property, and this offer widget are all today, the way they're configured, that's part of our base package. And honestly, the way the product really works ideally is when you have the combination of credit data and financial data, as well as property data. Now, where we're going with our product is a persona-based experience. So as an example, if I'm a persona of a first-time home buyer, well, I don't own a property. So this widget and that persona wouldn't even exist for that consumer until they actually owned a property. So there's some customization available in implementation. We also, we will do a professional services kind of statement of work if someone wants to do additional customization, and we do have that from time to time, whether it's putting in another widget and then having some other information that the lender may want displayed, things like that. So that's kind of where we are with customization in terms of the experience. Now, the user, the consumer, can also configure the widgets that are made available by the lender. So in this instance, I can make this budgets and goals taller, wider. I can move it around to a different place. And so the next time I log in, it would be in that place. Of course, I'm going to put them back because it screws up my mojo when I'm doing these. So yeah, there's the ability for the user, the consumer, to customize. And then in our mobile app experience, the same function feature is available to the consumer. They can sort which widgets show at the top of their screen versus the bottom. So there's a customizable view for the user as well. So let's start diving into a few widgets, and I'll try to again frame this in the context of that first-time home buyer early in their journey. So let's start with kind of before a locker becomes a locker. How do you get the consumer into the locker? I talked about the unique link that can be created per a loan officer. The lender can create an infinite number of unique links, and those links can be tied to campaigns. And inside our admin portal, they can actually say, I want this. This is going to be my Facebook paid click first time home buyer campaign that I'm running October 15th through October 20th. And I want to make available 200 lockers for that campaign. So they can set that up in their admin portal. A link will be created, and that link will allow 200 lockers, because that's the limit I put on it, to be created under that campaign. And then they could take that link, copy paste it, and drop it into a marketing campaign, put it on a Facebook ad, put it on their website, however they're going to create a marketing campaign. The locker and all of its feature functionality, I think, creates a wonderful set of calls to action for lenders who are forward thinking on how to get consumers up the funnel earlier in their journey, engaged with their brand. So just on this screen alone, there's probably 10 to 12 calls to action that might entice a consumer to click this link and get their free, ABC mortgage locker, right? It could be free credit score, free credit monitoring, budget tools for helping save for a down payment, real estate search, home ownership and mortgage education, et cetera, et cetera. So a ton of great marketing calls to action are enabled off of this tool as well. So however the consumer gets to that link, the first thing they do is they click the link. They can also start by downloading the mobile app. So if your campaign is focused on getting them to download the mobile app, you'd have a link to your Apple Store account. They click that, and then they download the app, and the experience starts there the same way. Setup is easy for the consumer. It's first name, last name, email address, and mobile number. Those 4 data points create an account. They'll immediately get a text from Finlocker to authenticate that mobile number, and then their locker is created. When they first come into their locker, they're going to come into this dashboard, and all these tiles are going to be pretty much empty. And so the first option that they're presented with, the consumer's presented with, is they're asked if they want to link their credit and see their credit score. And we put that first in the workflow because, frankly, we see that as one of the highest engaged tools consumers use in the locker. So the first thing we do is ask them to link their credit. 9 times out of 10, by just inputting their last 4 digits of their SOCH into the enrollment screen, this credit widget comes to life. In the 1 out of 10 cases where it doesn't come to life based on the last 4, we ask the locker asks a series of out-of-wallet questions to that consumer. We use TransUnion's identity verification service, and then that consumer is verified. And as soon as they're verified, this widget comes to life with their credit score. It is a Vantage 3.0, and the score updates every 30 days from that date that they first enrolled their credit. So that automatically creates another engagement opportunity, because every 30 days, the locker is going to be messaging, at a minimum, messaging the user to say, hey, your credit score changed, great news, or hey, come in and check out your credit score because it kind of slid a little bit. Behind this widget, the user has full access to their credit report, all of the accounts in their credit report, pay history, when it was open, the credit limit, minimum payment, blah, 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 all that good stuff. Quick links to the right on credit education content. What is a credit reporting agency? how is my score calculated? Why are there 3 bureaus, et cetera? And then I mentioned our coming soon feature, which is our credit simulator. In this widget, the user will be able to model changes to their score using their actual data. So I talked about a Chase credit card. So here's one with a pretty sizable balance. And if I wanted to understand what my credit score would do if I paid down this balance by 5, 10, 15, 30 grand, the simulator will allow a user to run that simulation and get that instant feedback. There's also the other piece of engagement for credit that's coming with our build later this year is what we call Credit Compass. Credit Compass allows a user to basically turn the dial. If they're at 731, like this consumer, they could turn it to 800, and the locker will give them feedback on the things they should do in order to build their score from 731 to 800. All right,
And on
so
this,
back, yep.
for the credit stuff, so it's a consumer credit score, right? Instead of a mortgage credit score. And then what would they be able to do? Is that going to be will it be an inquiry then?
No, good question.
Okay.
So it's a soft, single bureau soft credit pull, so there's no inquiry. So it's no one in the world knows what's going on. It does not impact their credit score, but it is a consumer credit score, and so it can't be used by the lender for making credit decisions. The
It's
data
great for investigating what's on your credit report, though.
Yeah, it's really this is really built. The use case for this credit score and report is for consumer education and awareness and readiness. The data in the credit report, however, those trade lines, we actually use that data, and that becomes part of the data set that we deliver on the back end when we're creating the Fannie 3.4 MISMO 3.4 file, whatever it's called, for a lender to ingest to pre-fill their mortgage application. And then the lender then would, in their own environment, once, because we're not a POS, right? We're not a point of sale. When a consumer shares from their locker to a lender, the lender then is starting their process, and that's when they would run their own credit report that would be used for their lending decision.
Great, thanks.
You got it. Good question. So following credit, the next kind of workflow item for users is we ask them if they'd like to start adding their financial accounts. And so we take them through a series of prompts where they can add their financial accounts. I mentioned earlier, the accounts are both assets and liabilities. So these green font represent the asset accounts. The reds are liabilities, credit cards, and a mortgage. On the left is a summary of each account. So you see we've got an account, a relationship with Midland States Bank, and three accounts underneath Midland. What's cool here is if let's say I have I bank with Chase, but I also have a credit card and a mortgage with Chase, my single sign-on to my Chase account would bring all of those accounts underneath that sign-on into the locker automatically. And what you see on the left is a summary. So it's the truncated account number, in this case, the savings rate or interest rate on each account, and then the outstanding balance. The locker, Finlocker, harvests all of the transactional data from the prior business day. So each night we harvest all of the transactional data. And that's what you see over here to the right, is all of the transactions from all of these enrolled accounts. So this is that single pane of glass view that a user has now across all of their financial accounts. And let's just look at that in a practical sense and show you a couple widgets that are firing off of the transactional data. First one, spending analysis. This is a place, again, single pane of glass view where the user can see their spending across categories, across all of their different enrolled accounts, checking, credit cards, et cetera. And then with quick clicks, they can drill in and just see, in this case, full month September, food and dining. In 2 clicks, I just sorted down to these 32 transactions that make up food and dining. And then I just want to point out the granularity here is fast food versus restaurants versus groceries. So we get pretty granular in the categorization. Any questions there, Tony? Or are you just saying hi?
I'm just saying hi.
All right.
Yeah, this is fantastic.
So spending analysis is super important, and that is a good dovetail into budgets and goals. So I'm going to click into the budgets and goals widget. And so I'm not going to spend time in this view of it. This is where a user can set up very specific budgets and goals. I want to share with this group our detailed budget. And this has a ton of relevance in that first-time home buyer space. So earlier this year, we partnered with a handful of nonprofits and housing counseling agencies. And we have a couple that are clients of ours. And the use case for these counselors came from how they described that they engage with their consumers early in their process. Usually their first meeting with a consumer, imagine the consumer walking in with their shoebox of statements and receipts and blah, 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 blah. And they manually create a budget using the, consumer's income. They tell them how much they make, and then looking at all their statements from their credit cards, their mortgage, their auto loans, et cetera. And counselors were telling us that exercise was anywhere from 30 to 60 minutes just to set up this budget. And then in order to manage that going forward, they had to do the same process every time they met with the consumer. And so we took a step back and asked the question of the counselor, well, what's the format that you need this budget in? And they told us it's a HUD approved housing counseling budget format. We went out and studied it. And essentially we built this format, which is what you see here, these high level sections of spending: home, travel, food, education, children, et cetera. These are modeled after what the HUD counselors use today, both up the funnel with pre-purchase counseling, but also in loss mitigation. And once the user has set up their locker and input their income, so they start with their annual income, we ask them some questions around the deductions from their pay stub, and then we get a net monthly income number, which, if you remember earlier in this conversation, I talked about our roadmap later this year, which will allow a user to directly link their payroll in a locker. So when we do that, we will get the direct net pay right off that payroll account. And once we have that, these bottom sections, these expense sections are populated. So the black font represents the plan or how much a consumer should spend in these categories based on their net income. And then the right side, green and red, represent their actual spending in each of those sections. Green means they're under budget, red means they're over budget. And then when you open the accordion in any section, you can see the granular areas that roll up to, in this case, home expenses. So rent or mortgage, utilities, cable, internet, et cetera. This is a painstaking process that a counselor does today with a consumer. And we've gotten traction with several agencies and nonprofits to help automate that. And so where that's beneficial for lenders who are using Finlocker, again, up the funnel, helping prepare and groom home buyers, especially first-time home buyers, you're giving them essentially the same tools that they would get if they were going to a housing counselor or a nonprofit. Now, I'm not suggesting that they shouldn't go to a housing counselor. We actually subscribe to this concept of high touch and high tech, and let the technology do the heavy lifting of budgeting and tracking, and then let the counselor do what they do best, which is advise and provide feedback along the way, which is not too dissimilar to what most great loan officers do with their consumers as well. I wanted to make sure we spent some time on that because that's important. All right, we're getting close. Tony, I told you we'd be done in well under an hour, and I knew that wasn't going to happen. So sorry about that.
Okay, this is fascinating.
Couple
I
other
love your product.
Thank you. A couple other features I want to show you just real quick. Once a consumer owns their home, they can link that property, and then we'll go out and pull the value. So we bring in an AVM. This data in this lower right, this is coming from the enrolled mortgage in the locker. Okay, so and why that's important, you notice the balance here is 414,567, right? If I go to the credit report, and look at that same line item in the credit report, and I know it's this way because I just looked at it yesterday. I think it's 415,382. So the credit report hasn't yet reported the October payment that was made, but because we've linked the mortgage to this property, we see literally the day after a payment's been made what the new outstanding balance is, which is important for this calculation, which is the estimated home equity. This is an example where lenders can present guidance, offers, recommendations to consumers who have built up equity for debt consolidation, for straight home equity products, et cetera. So in addition to tracking the value of the subject property, we're bringing in the recently sold homes. I call this the nosy neighbor feature. And then we also enable real estate search directly from the experience. So again, what's important here is the consumer's not getting put out to Zillow. They're in your environment through our integration with a search provider. And nobody else is seeing, the consumer who's favoriting properties and searching in a zip code, et cetera. These data points, when I favorite a property, when I'm doing searches, become kind of what we call digital exhaust. So these are events and alerts and milestones that the lender has access to when their customers are using the tool for things like real estate search. I want to quickly pivot to mortgage readiness, and then the last thing I'll show you is how a user would start. Well, I'll do two things. I want to show you our dynamic calculator, and then how a user would start to share data for a loan application. But first, the mortgage readiness assessment. Once the consumer has completed the profile, linked their credit and at least one asset account, this readiness assessment comes to life. This guideline column is right now it's configured to Fannie Freddie guidelines. We do have a configurable rules engine. So lenders that want to have, more or less restrictive guidelines, we can do that on implementation. Other products, whether it's non-QM or even other products, can be configured. But for this demo, we're really focused on kind of the agency guidelines. That's what you see here. The actual is the actual live data in the locker against these guidelines. So green checks intuitively are good. In this case, we've analyzed this consumer's credit, validated no bankruptcies, no foreclosures, no late payments. But then we get down to debt to income ratio, and we don't have a green check, and we're at 101.95 versus 45. The average consumer has no idea what debt to income ratio is and why it's important. This is where we use some of our interactive education content to deliver it in those places where consumers may have questions. So here's a 1-minute tutorial explaining what debt to income ratio is. And then once they've learned about DTI, they can click in the budgeting tools and learn how to use the budgeting tools in Finlocker to improve DTI. So wherever you see these little media icons, we're serving up kind of timely content along that journey. The experience in the mobile app is even more integrated as part of that journey that's happening there. So in a perfect world, we've got all green checks on our readiness assessment, which means our consumer could then come in and start the mortgage application process. And this is where our lender may have some calls to action, like submit mortgage app. So they could click here, which is just an internal link that's going to our share center, but I'll fire it off from here. And now we're going to take the user through a couple of validations. This would be the lender's name, who they're going to share their content with, for what purpose. We default to a home loan, but underneath here, I've got auto, credit card, personal loan, student loan. So again, depending on our client, what other products they may offer. We default, again, single family is a question we asked in our profile when this user said that one of their goals was to buy a new home. We asked them some questions about what they're trying to buy. The loan amount, social security number would be there because this is a demo account. It's forcing me to just dummy one in. So Income. So today this is self-reported. I mentioned a couple times that we are in our roadmap includes bringing direct source income into the locker via linking directly to a consumer's payroll. So in that case, we won't ask for a consumer to verify their annual income unless they haven't linked to their payroll. Then we would prompt them to link, or if they don't want to link, they could self-report that. And then they could add a co-borrow, but I'm just going to speed to the next section. So here's our locker owner, our borrower, if you will. These tiles now represent data and documents. These top 6 tiles represent data from the asset accounts and liability accounts directly linked in the locker. So I can select to choose all, deselect, I'll choose these liabilities. And then I mentioned documents. We prompt the user to store documents in that journey. So things like tax returns, pay stubs, perhaps, maybe a letter of explanation. Come out, there we go. And now the next screen will be our consent. This is where our lender, we would put your consent language in here that the consumer is agreeing and consenting to share this data for purposes of a mortgage application or whatever the compliance verbiage needs to be. And now the consumer has clicked, and now what's happening is we've bundled up the data from the locker, both profile, self-reported, plus direct source, consumer permissioned data from those asset accounts, credit report, liability accounts, and then soon to be the income and employment. And that has been shipped over to the lender. If there's no integration, there's an email to the loan officer who would accept the email and click a link to come into the admin portal. If it's an integration, we would be dropping off that MISMO data set to that endpoint where the lender wants it. Could be POS, LOS, or other. And then we're essentially providing the lender 80 to 90% of the data needed to pre-fill a 1003, as well as any of those documents that have been shared along the way. So that is, we're at the top of the hour. I covered a ton, probably went deeper than I had planned, but hopefully this is helpful, Tony, for you and the team.
Excellent. Thank you so much, Brian. Really appreciate it. Yeah, this is great information. You guys will get a follow-up email tomorrow with a link to the YouTube video. So please go and check that out as well. Want to quickly, before we get off, shout out to Matt Woolley, longtime friend of TMC, new to Finlocker as the SVP of Director of Sales. So hello, Matt, and look forward to working with you again. So thank you very much, Brian. Appreciate it. And I hope everyone has a great rest of your day.
Thank you.
Thanks.